in your world, what is priced in and what should be priced in? I mean, I'm hearing calls now for like $40 oil potentially.
Right. Well, I mean, remember, in the commodity complex, we've had such a massive supply disruption, particularly on the oil side, also to some extent on the copper side. So supply disruptions have really been taking over the commodity complex in 2019. We've had OPEC cut production at the beginning of the year. They're now looking to cut production again. You've lost more Venezuelan oil. You've lost Iranian barrels, almost 2 million barrels of Iranian oil in a year and a half. So you've had enormous disruptions, and that's what's really supported the price of oil. If it wasn't for the disruptions, we would be at $40 a barrel, right? Or the cuts, right? So I think that's clear. But now going into next year, if we do get that cyclical rebound in demand, if OPEC maintains the cuts, we still think Brent could be at $70 a barrel at some point in the middle of next year. Right? But we need to see that improvement in cyclical activity. We need to see that inflection point moving us higher.
And I would also argue that we're going to see weakness in US shale. It's very, that's been the biggest contributor to global oil in the last decade, and it now really looks like it's running out of
For sure. I mean, you're seeing slower growth. We're projecting 700,000 barrels a day of growth next year compared to 1.2 this year and 1.6 last year. So clearly a deceleration trend. But still a fair amount of oil. And also importantly, for the first time in 10 years, we have a large amount of non-OPEC, non-shale production coming into the market. We have Norwegian oil coming in, so the North Sea is going to grow next year pretty meaningfully. You have Brazilian oil. You have Exxon and Hess with this great project they have going on in Guyana, which is also going to beef up supplies in the Americas. We have Canada. So for the first time, we have 900,000 barrels a day of non-OPEC, non-shale. That's a lot of oil. So there's a few things going on. And then also on the demand side, I mentioned IMO 2020, which has had a big impact on a number of fuel markets, which we also think is going to be helping the demand complex in the first half of next year.